Hey, everybody. Welcome back to the Canadian Real Estate Channel. This is going to be my first ever live stream with you guys. And tonight we're going to be doing some MLS hunting. I just got back from a walkthrough actually in Cambridge today. And I'm sitting here. This is not my permanent setup for you guys. I will be building a new set for the channel. But I just got back to Stainer. So I wanted to go through the MLS with you guys and just take a look around and see what's available right now. The seller today that I ran into, he had like some serious sticker shock when he realized that the prices that he was looking at, the prices that he thought he was going to get for his property are from data points that are like, over a year, maybe 2 years old. And he's looking at historical highs in the market. And I had to be sort of the bearer of bad news today. And I kind of knew, going in that his expectation was wild. But when I got off my initial call with him and went and looked at the comps in his area, it was like a big delta, like $200,000 delta. So I was, probably in the same boat as him in terms of just like sticker shock when I started looking at selling a couple of my buildings recently. And yeah, here we are. That's the reality. Okay. The reality is things are sitting on market longer. There's not a ton of volume in transactions just in total right now. So this is actually when it starts to become more interesting to be looking on the MLS and more interesting to like just see what's out there. So this kind of stream is just going to be very casual. I'm going to look through some properties here, share my screen with you guys, and just sort of like walk through the park with you. And what I'd like to do and what I'd like to see for this sort of series coming up is like super casual. Bring a beer with you tonight. I'm having a Hilltop Light Lager from Northwinds Brewery in Collingwood here. So I'm going to have a beer with you guys. We're going to dig through the MLS and we're just going to kind of hang out. So if you guys have any questions or properties that you would like to look at or, things that you want to explore, feel free to throw them in the comments. And I should be able to get all your comments now. I had some issues last week responding to comments through StreamYard, which is what we used to do this live. So if that's the issue, just keep spamming the comment. And if I don't actually bring it up when I'm talking, then we'll have to construct additional pylons at that point. But purpose of this stream, casual hangout. So if you guys are ready to learn and ready to go explore with me, let's just jump right in. I'll start sharing my screen here and we can start digging through the MLS and start talking about, just the state of the market right now. And hopefully maybe we even stumble on a deal. So just as I get started here, you can see this is just kind of my realtor.ca homepage. You can see here, there's two recently viewed. I'm going to do a shameless plug right now because these are two of my actual listings. This, if you guys are feeling a little stocky, is the actual building that I'm living in. So I'm actually house hacking this property right now. And it's you can see Adam J.D. Martin right there, salesperson. But I'm living upstairs house hacking this. And I've got this storefront open and available in the bottom of this building. And I'm looking to get $1,500 a month all inclusive. But at the same time, like, if somebody comes up with a creative offer, a creative deal for me where like they want to come in here and like have a rent-free period as they get set up in their business, or they want to, I don't know, come in and like redo all of the finishes in here and make it their own space, like go for it, man. I don't care at all. So what I did is I got rid of the previous store that was in there because they were constantly paying late or not paying at all. And I just painted it white. So it's kind of a blank canvas for anybody that wants to look at it. $1,500 a month is, I am actually kind of flexible on that too. Like I'd like to see it be at least 1,400. I don't really have a huge room there for negotiation, but at the same time, like I'm living up here for free. So if this thing's rented, it's really just the cream on top. So, anybody that's looking for commercial space, this is in Stainer. And just an interesting little rental that I've got. And then I have another listing here, and you can see Mr. Adam J.D. Martin. That's myself. This listing here is actually in Springwater Road in St. Thomas, and it's a good friend of mine. He actually sold me my truck, and he gave me a call, and he wanted to see if he could sell this property that they just finished renovating. And it's actually like a really crazy property. It's fully renovated, and like you might think this is like staged, but this is actually like how the tenants are living, which is crazy. But I just wanted to show you this because I think at this time in the market, like if you guys want to sell something, too, by the way, like for those of you investors that are looking to sell something, make sure you guys get all this stuff done. So this is called an eye guide. And what it is a 3D tour, a 3D walkthrough of the building. And you can just click through and actually walk through the entire building and get a feel for it. And the reason I think this is so important is because a lot of people invest, you don't necessarily invest where you live, right? And so I think this is a great asset for somebody to be able to come in and just click through a walkthrough like this and potentially either save themselves from going and seeing the property, or think, okay, this is very interesting. I want to go see more about that property, and then continue the conversation from there. So if you guys aren't doing these on your properties right now with your agents, you should really fix that, because I think it's essential. And at this point in the market, I think it's really important to focus on those little details that can help separate you from the actual competition. So here's just an eye guide of 9524 Springwater Road, and that's in Elmer. And this kind of a crazy property. Like, they did all the renovations, so I'm not expecting necessarily somebody on this channel who's watching this to be the buyer for something like this at 155. The seller does have some room, they've told me, so we've got a little bit of wiggle room on that price. But the important thing to see here is, like, this is a building that's like turnkey. Rental income right now is 109,200, and it's just like totally done up. So I absolutely love showing off these properties from fellow investors that are done. This is the highest and best use of this building. They essentially took it from like a rooming house and then built it into this beautiful fourplex. And you can just see, like, the tenants are just A+ here. So they have fully got to the maximum value that they can in this building, and it's time for them to let it go. So not necessarily great for those of you who are value add investors, but man, what a crazy turnkey property. So that's enough of my shameless plug listings right now. And let's just jump into realtor.ca and see where we can maybe find some deals. So today I was looking in Cambridge. So I was thinking we could just go take a look at like the area of Cambridge that I was in, and maybe just get an idea of what things are kind of at least listed for. And of course, we always know that when we see listings on here, we have to understand that, like, the actual list price, it could just be anything, right? Like, the listing agents, excuse me, are essentially forced to either list at their client's demands for list price, or they look at comparable sales and they try and come up with a pricing strategy that helps. So sometimes, you're gonna hear people say, like, oh, it's a seller's market, so we're going to list at like some low price and try and get a bidding war going on. And I find it all to be kind of confusing. So I don't really love looking at list price as a great indication. But I did just look at some sales that were recent and actually closed, and that's where you actually want to find your data. But for this live stream, we're just going to poke around on some deals and just kind of like see, is this a relevant sale close to or at what I've seen for comps, and just see what we can find here. And maybe we stumble on like a diamond in the rough. We're going to spend a little bit of time on Cambridge, then I'll jump over to London, where I think I actually probably know something. So I just saw a comment here. So those are coming through, which is just fantastic. So I've got All About You Jesus has just commented here. Do you think interest rates will reduce? Well, that's kind of a sticky point for me. And, the Bank of Canada kind of just does whatever the hell it wants. Do I think they'll come down? I actually think they will, but I don't really think I'm an expert in that area. And we do actually have a show on Fridays called Finley Finance Fridays. And that's with the Finley mortgage team. And you can go watch, they shoot videos with us every week talking about mortgage stuff. So that might be the best place to actually get that information from us. But at the same time, like, mortgages and the rates that they're at is largely a political tool, I think, at this point. And they're trying to like reduce inflation by having the rates be high. But at the same time, like, I think they're going to cause some serious market conundrums. So I wouldn't be shocked if like you see it come down in the next year or so. And especially as we get closer to an election, I think there'll be all sorts of pressure put on them to just reduce it. And like, it probably won't be a healthy thing for the general market because people are going to go crazy. And you know, I think they'll just continue to go crazy. But it just kind of is what it is at that point. Like, yes, I guess my short answer here is yes. And I don't have a well thought out reason as to why I think that they'll lower them other than just like political and social pressure. But I think that those things are real and that they'll actually have an impact on what happens to the interest rate in the long term, or at least like medium term. And then next comment there was, is it a buyer or a seller's market right now? It's kind of an interesting question. Like I've heard a lot of people comment on this recently that it's actually a buyer's market right now. And I don't know. Like I think we're somewhere in between because properties for on one hand, like you could certainly say like things are sitting longer. There's not a ton of volume moving. And the properties that are selling, like at least when I looked at comparables for the property that I just walked through today in Cambridge, like the ones that were selling were like really nice, like super clean listings that had like great photos. Like there wasn't really anything that needed to be renovated or updated. The properties were like, you know, freshly painted, well lit, great photos. Like everything was just kind of mint about the listings. And then with that being said, the prices that they were selling at were still quite a bit lower than historical highs. So like, yeah, you could say it's a buyer's market, but I think the interesting thing when we're talking about like, is it a buyer or seller's market? It's way more interesting to look at your individual needs from my perspective. So like the house that I went and saw today, like I would have no desire to buy it at all. Like there's no circumstance where I would want to buy that property for an investment property. But there certainly are investors out there that would see that as a great opportunity to get into a long-term rental. And it's just like your needs seriously dictate what you look to invest in. So like my goal, for example, moving forward is like all purpose built properties that are multifamily residential or multi-res with commercial splits, and making sure that everything's separately metered, purpose built, like solid stuff. But that's not what got me here, right? Like what got me here was like, you know, terrible duplexes and like the worst single families ever, in the worst conditions possible. So like those are the things that got me here. And at the time, those were the best possible things for me to buy. But today, like I wouldn't have a ton of interest in that because it's so much more work. So I think, that whether or not it's a buyer or seller's market doesn't really matter. It might change your offer process. And I actually posted a video very recently about some different strategies that you can be using that you're probably not right now, like the reverse offer. So, you know, there are things out there that you can use to help leverage the state of the market to get a better offer out. And, you know, like if when people are all screaming that it's like a seller's market, you know, things aren't sitting on the market very long. There's a ton of volume moving. There's lots of new listings and they don't stay. And there's lots of buyers and lots of capital chasing those goods. When that's happening, like, yeah, of course, like you have to offer more aggressively, right? Like higher price, less conditions, all of those things are going to help you actually get the deal. But like just saying that it's a seller's market in and of itself doesn't really change the facts for you, the investor, in terms of like what you need to go get. Right. So I think that that's like a common misconception is like people constantly are like, wow, it's like, you know, you have to sell right now or you can't be buying. And it's like, well, fuck, look at your goals, man. Like, what are you trying to do? How much capital do you have? What skills do you have? What partners do you have available to you? How can you make that work? Excuse me, guys. I have a cold, so I'm going to have to like mute and cough about 100,000 times. But we're going to try and cure it here with a beer. And hopefully that actually works out for us. So is it a buyer or seller's market? I think most people would say that it's a buyer's market right now. But at the end of the day, like some people are still very out to lunch. And I guess that's part of what I wanted to touch on in this stream today too, is like the guy that I was talking to today, he's got this like, you know, it's actually a really well kept house, but it's like old. It's like super old. It's like built like probably late 1800s or like super early 1900s. Stone house. It's actually built really well, and kept up really well, like totally, like really, 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 really well. But the problem is he's looking at that data that's, you know, maybe 2 years old, and he's up in like the 900s, when like realistically the after repair value is like way closer to 700, or even possibly a hair lower than that. And so all of a sudden what happens is you see people get this like loss aversion, because in someone's head, regardless of what they paid and what they stand to gain, when you bring them down from a higher price to a lower price that you actually can pay and what's realistic, they don't see the capital gain that they're about to make. They see the loss on the money that they thought they were going to make. And we have an inherent loss aversion bias as humans. So like, you know, that loss, that perceived loss in the deal is like really hurtful, and much more hurtful than the actual realized gain gives you satisfaction, if that makes sense, right? So you get more hurt about not getting the price you thought you would than you do get excited about the price that you are still going to get in excess of what you paid. So that's an actual problem. And that poses really hard challenge for that poses a really hard challenge for investors in particular, because, and this is what I told this gentleman, I was like, look, man, like realistically, you don't want to sell this property to me, because I'm going to have to offer you a price that is way lower than what you could get if you just did these few different details, right? He's got a couple bedrooms he's got to finish. He's got a little bit of flooring to do, maybe some paint, and a couple updates. I'm like, man, you could get a lot more money. But the reality is, if somebody has a different set of goals than we do, so perhaps he doesn't want to do that work, like maybe I'm still going to offer on it, but it's like, you know, you could get a lot more money on market, but it's still going to be like $200,000 less than what you thought. So when I offer, it's going to be $350,000 less than what he thought. And then if he were to go and do those few fix ups and go list it, it might be, you know, 200 or 250 less than what he thought. So it's like a huge delta, and managing that expectation is really hard. And I think that's the current challenge for people. So when somebody says to you right now that it's like a buyer's market and they're all hot and bothered about that, like, I think that they haven't fully grasped yet the challenges that the sellers are going to present to you, because they have all this information, right? Like, oh, Bob down the road sold for 900,000, right? And Jenny sold for 1.2. And it's like, yeah, maybe they did. But the problem is that was a completely different world that we were living in. We went into some sort of weird cosmic epic soup of madness for a couple of years, and that's over. Okay, rates are up, properties are sitting, things are not they're not valued the same anymore because people are being less insane, and it's actually good. That's healthy, right? So when we look now at like what a mortgage gets you, there's all sorts of like memes and infographics out there that show you like what $3,000 got you before and what it gets you now. And it's like, yeah, like there's a big delta when you double the interest rates. Another point that goes along with that is just the idea that like the idea that, you know, a lot of people got sucked into these variable mortgages when rates were like 1.6%, which is goddamn hilarious, because we were on here talking on podcasts and stuff like that about like, don't do it. Like, why are you doing that? Why wouldn't you lock in a rate at like 1.6 for as long as you possibly can? Like lock your children into that rate, right? Like trade a baby or something for that rate, so that you could have it forever. And people were like, I'll just take like a 3-year or like a 1 year on that rate. And you're just like, what are you hoping for it to get less? Like, it's not going to be less. And if it is, it still wouldn't matter. Like, you should have, that the risk wasn't worth the reward. So here we are now, and people are going to start paying for the risk that they took, to potentially get rewards when rates were already is basically free money. So now it's actually not free money. It's probably priced relatively accordingly for how it should be for the risk. So yeah, that's kind of my thoughts there. So when people say it's a buyer's market, like, I don't know. I don't think so. I don't think it's max pain yet. Like, I think the market still has to suffer a little bit. And I think that there's still room for pain in the market. And that's like, it just is what it is. I'm not saying that's good for everybody. I'm saying that for those people that are ready and liquid and about to make moves in 2024, you know, maybe you're going to find some deals. Now, for the people like me who are idiots and didn't have enough cash on hand and had to sell buildings at this time, like, yeah, you're going to sell for less, right? So I just sold a triplex, and it actually got a lot of walkthroughs, got a lot of interest, and it sold very quickly, which I was happy about. But it sold for like, we were hoping at least to get like 80,000 more than what we got, and we just didn't, right? And so you just have to eat that. But for people like me, like if you tied a lot of capital up in a lot of opportunities all at once, like cash flow is what will kill you, right? It's not profitability that kills you, it's cash flow. So this is where I'm like, damn, dude, like I'm running out of cash. I'm trying to do this building here, this fiveplex, and I'm running out of cash. And like, you just realize you just have to make a decision to sell and free up a couple $100,000. And so that's what I did, right? And it's like, there's going to be lots of sellers out there like me who are actually informed and still have to sell buildings because you overreached a little bit when the market was super hot, and lots of people did that. So here's to overreaching. But if you're not going to go big and fail, like what the hell's the point, right? So, and don't fail totally, like pay your people back. But other than that, like go for it. So sorry, I got off on a bit of a tangent there, but I'm going to catch up here to these comments. So we got an address here to look at, and so we'll pull that up here in a second. So we'll pull up Hopewell, and we'll take a look at that, and we can talk about that. And then we've got some stats coming in here. So we got a comment here about 40-year condo in Brampton, have invested in a property near Niagara for $850K. Should I close or sell? What is your opinion? Should I keep the condo or sell? I guess like I don't think I really understand what you mean by 40-year condo. Like it's 40 years old or what? But so condo mortgage, we got some numbers here. Condo mortgage is $300,000. The value is $650, and it's rented for $2,500 a month. Maintenance fees are $725. So like your mortgage payment, right? So usually we'd look at maybe $600 per 100K. So you're 612, 1,800 plus your 725, right? So that's 2,500 right there, and 25. And then you've got your insurance and your taxes, right? So you're probably, unless that's an older mortgage, like you're probably losing a few $100 a month, I would suspect, on that deal. And so again, this is where I like to think like, okay, what are my opportunities, right? What are my strengths, weaknesses, opportunities, threats? You could look at it like a SWOT thing, or you could look at your broader like 5-10 year goals, and you could think like maybe Dean Graziosi's exercise of 7 levels deep, and just think about like, what is the purpose of this property? And so, you basically, what you're saying is there, you've got 300,000 in debt and a potential 650. So you could liberate and like free up maybe like 300K in cash after you pay the realtors and closing costs. And then you'd have 300K burning a hole in your pocket. So I think that the real question here is like, okay, so you've got this tenant, like, is it super stable? Are they like incredible tenants? Does it require like absolutely no management or maintenance? And then that like couple hundred that you lose every month, if you're properly factoring in everything, then like, is that worth holding it? What do you think the maximum value is for that building over the time horizon that you think is appropriate based on your goals? So it's like, what are you going to do with the 300,000? That's question number one. Do you have an opportunity lined up? Do you think that price is likely to stay the same, go down, go up in the short term? And then like, what's your actual goal here? Because like a lot of people think that they want to get into these value add projects and like, buy a property, renovate the whole thing, do kitchen, bathroom, flooring, landscaping, lighting, paint, and then rent it out and keep it as a burr forever. Right. And then once you do a few of those, you realize that like that process is a giant pain in the ass, and it's a lot of work. Right. And there's a bunch of skills that we don't have. So we end up contracting things out, which cost more. Contractors aren't always available. So like your scope creeps and it takes longer than you thought. And then it turns out that like you don't make the same amount of money that you thought you would. And so then you start chasing like bigger and bigger deals. So I guess that's the path that I've seen a lot of people go down. And when we're talking about like a stable condo investment here, it sounds like you're breaking even or close on the condo and a stable tenant that's been there for 2 years. So for me, it's like, okay, here's the options, right? Like leverage it and pull that capital out and go do something with that, or sell it, get all the capital, pay a bunch of capital gains tax, and probably end up similar to what you would have got if you just refied it. Or keep the damn thing with your stable tenant, right? And see where it goes. But it really just depends on where you're trying to go, right? Like that's the actual like thing here, right? It's like, do you want to double that money? Because it's not going to double sitting in a condo that's 40 years old in a neighborhood that's obviously older than 40 years, right? Like that's probably not going to double anytime soon. So it's like, if you're trying to double it, then you probably need to exit and go find something where you can add a bunch of strategic value. If you're trying to just use it as a forced savings plan, maybe go leverage the building and pull some of that liquidity out and go and invest in something else. That's another great way to do it. Selling right now, like I wouldn't be shocked if if you listed it, you get like a fair price and it sits maybe like 30 or 40 days on the market. But you could extract that capital and then pay some taxes. But you just got to ask yourself, like, what sort of time are you looking to invest in the next project? And are you going to kick yourself in the ass later thinking like maybe that wasn't the best time to sell? Because that's another thing that I've done, where you like sell a building and then you're like, damn it, I should have waited one more year and the prices were way better. But you never have a crystal ball. And right now is one of those times where we definitely don't have a crystal ball, right? Like next year could be terrible for prices, or it could be much better if the rates go down. Hard to say. But the other thing is true too, that like, as long as you don't have a purpose for that money, then somebody else paying $2,500, right? A large portion of that, maybe half of that, would be against the mortgage. Like that's pretty good. That's a good way to continue saving and then have more access to more liquidity, more equity later. So a couple of things to think about there. Geez, we're not doing a lot of MLS scraping tonight, but that's all right. This is the first one of these, so I figured it would be pretty conversational. But we should at least look at some MLS stuff, or somebody's going to kill me for the title. So here we go. Today I was kind of in the neighborhood of something like this, and we thought, oh Jesus, I just picked the one listing. Okay, let's just talk about this. Okay, we just found the one listing in this area that has one picture. And I got to tell you, that's frustrating. So do you guys remember like 3 seconds ago when I was like showing you guys my listing that had a 3D walkthrough? How the hell do I get to that now? Oh, I'm not signed in. Son of a gun. Okay, well, anyways, I had a 3D walkthrough of that whole freaking listing with like, it's got like 70 pictures or something, and you can walk through the whole damn thing. It's so much nicer if you can walk through it, because like I don't have any idea now what's going on in here. So let's look through this description. It's in a charming neighborhood. I actually sold one of my duplexes on this, like right off of this street this year, or last year, I guess now. And what the hell did we get? I think we sold our duplex for $650 or $675 or something like that. So, or maybe it was I think it was $800. Wow, I'm pretty bad at this. I'd have to go look. I actually forget now, but I think it was maybe closer to 800 than 6. But anyways, so here's a single family for $540, 3+1 bedroom bungalow. And it's an exciting opportunity for renovators. You're kidding me. Are you serious? That's amazing. That's us. That's what we do. It has all the essential amenities. Yeah, there's like a school right by here, which is actually pretty nice for people to think about if they're doing a renovation. Potential for multifamily living. So I guess you could potentially do like an illegal duplex or something they're trying to say here without saying it, maybe. I'm not really sure. And you could capitalize on the prime location. So yeah, I mean, this location's not bad. It's is this going to work for us? Where are we at here? So it's in Preston, right? So there's that school. It's what the hell is going on? There's a school right over here. Oh, there it is. So there's a school right here, right? So not bad for those people who have young families. So like I sold this building or something like that. Yeah, it was that building. So this was duplex that. Okay, here's the thing too with MLS sleuthing, you just go in here and you can like go on Street View, right? So this is useful. Here's the building that we sold, right? All new, renovated, nice, new siding. We did the deck, big, cute numbers, new windows, insulated everything. Got a bunch of parking. So, anyways, that's the one that I sold. And now what are we looking at here? So this is right over here, just down the street. So what I like to do is I like to come in on here and just drop our little dude and see which building it is. Doesn't look like any of these. Perfect. So what's our address here? 170. So we'll just jump in. That's 171. So what's going on here? Where's it taking us? That's 160 over here. What the hell? What the hell? All right, folks. So it says it's that one. It says it's this one, actually. But that's a yellow brick. We're not looking at a yellow brick, are we? Looking at a red brick. So something's funky. Oh, in the picture here, it says 143. What the hell is going on? So this is another issue, right? So like, you got to be careful with this. When you guys are sleuthing through MLS, like this is actually, this is really important. Okay. So when you're going through MLS, you got to realize that like, it's not a technologically advanced system that puts stuff on MLS. Okay. The back end of MLS that we have access to as realtors is the biggest, clunkiest piece of shit that you've ever seen. Okay. So when you run into a listing like this that's having issues, so like this, just the directions button, where the hell was that? Where was that? I just hit the directions button up here and it just totally broke and took us to the wrong place. Right. So this is a real problem. If you're trying to sell this damn house and somebody comes here and they're trying to like look at it like it from an investment perspective, and it takes you to 173, but the actual listing is 143. Right. So let's go back here and fix this. But guys, just, have some empathy for the realtor, because it actually is a giant pain in the ass. And it's terrible. Oh God. Okay. So here we go. I'm glad we're looking at this property. So see this, guys? Solar panels. Now I have a horror story. And for those of you that have been following long enough, you remember my horror story. But one of the very first properties that I ever sold, I wholesaled it to Luke Boyron, who's a fantastic dude. Who's also done some wholesaling and a lot of flipping here in Ontario. And I didn't go around the back of the building, and I missed the solar panels. And then when we come to close, we find out that there's this contract for the solar panels by this criminal company called Grasshopper. And they're absolute criminals. Like they robbed this poor lady. And so it almost held up the deal. And like the buyout was like insane. It was like 15 or 20 grand. And anyways, it was a huge like kind of deal breaker for what we were trying to do. But we ended up resolving it. But the point of this is you guys have to do this, and you have to see the value of just even using Google Maps here, because you can just see, boom, there's solar panels. So now if you were going to go walk through this property, you got to be on the lookout. And you can use this strategy for off-market or on-market properties. And it's funny because I didn't see them here. Oh yeah, they are. They're just covered in snow. So I'm just an idiot. I thought that was like an awning or something, but it's actually solar panels. So you got to use this tool because it's actually fantastic. And I know a lot of people know this, but seriously, like look at what that just did to help us out. Next thing that I'm always looking for when I'm looking here is like, who's living here? First of all, Anita, right? Bit of an old name. And then we got the Chevy Malibu. So, it's going to be an older person's house, and probably that's what we would expect to find on the inside, right? So it's probably, if I had to guess, carpet, maybe some wallpaper going on in here, maybe some yellowed walls, maybe some yellow on the ceilings. Probably need to gut the whole thing and do it all. So I'm going to be looking at that. I'm going to be asking questions about like, what's the deal with the solar panels? Are they owned? Are they rented? Did the company do what Grasshopper does? And like, essentially, what Grasshopper does is they basically lease the roof under the solar panels. And so like when your roof gets all screwed up, you need to like call this company, and then they send like a specialized contractor out that comes out and takes the solar panels off the roof and then like repairs the roof. And so you can just imagine the cost of that. It's a lot more than normal. And it sucks. But so yeah, I mean, you got to ask questions about that. Another feature I don't really love here is the parking. So like this said, like you could do multi-family living or whatever, but like it's a single lane driveway, right? And parking on the street's really cool until it's snowing like today, and then the city's going to kick your ass for that. So I'd be looking into that. And then the other thing we can do is just go in here and like look at what I would usually do is look at zoning. And you'll have to excuse me here because I actually don't know about Cambridge zoning. So Cambridge zoning map. So that's not a bad, oh God, don't tell me they don't have an interactive one. Okay, here we go. And I'm using my Windows computer, so literally nothing works properly. Hey, by the way, guys, this is like just bonus content for this stream. Don't ever buy a Windows computer, ever. They're gonna lie to you and tell you things like it's a sick gaming computer. It's $3,000. How could it not do literally everything? Well, it can't load basic pages. So drop a comment there drop a comment if you know how to fix this. Like back in the day, this used to be like Flash Player or like some sort of update that you could just do and your things would work. But I've been using a Mac for the last few years and I don't have this problem anymore until I got this computer, and now it doesn't work. But anyways, you get the point. Go Google the zoning map of the city that you're looking for. And from the interactive zoning map, you can usually just click on the damn thing and search your address and get the zoning. So when they're saying like additional dwelling, like, yeah, maybe. But go on one of these interactive zoning maps and actually confirm that, because like you can run into some serious issues. Like we have before where like, it's presently used as like a duplex or something like that, but it's not actually zoned for that. And so sometimes you can get these variances and sometimes they'll just allow it, or it's quote unquote grandfathered is a term that people love to use. Okay, this is never going to work because my computer is a piece of shit. I'm sorry. But people will say like, oh, it's grandfathered in. And it's like, okay, listen, I need documentation of that from your lawyers. And what I like to do is include on the, what I like to do, let me just pull one up, and I'm just going to pull it up off screen so that I don't get in trouble here, but I'll pull up an old contract of mine and you can see the, what I like to fill in is the present use. Okay. And the present use, if you fill that in with the actual present use that you're looking for, okay, here's a property that I bought. And you know what? I probably didn't even fill it in on here, but you'll get what I mean. So this is page 1. So this is a basic agreement of purchase and sale. And if you go in here, you can fill this area in, right? And this talks about the actual present use of the property for the purpose of title, right? So if they're saying like, oh, you could put like a granny suite in here, cool. And if they were currently running it as that, I would just throw in here like duplex, right? And what's going to happen is when you go to buy the property and it's actually not a duplex or not zoned for that, your lawyer is going to be like, hey, dude, this is not a duplex. And you're going to go, but it's being run as one. It's grandfathered, right? And then they're going to be like, no, what are you talking about? Like, of course it's not. And then you can actually, if you've already closed and it presents a problem there, sometimes title insurance will pay the difference in cost that it takes to get it to that use. And if not, then you can use it as a negotiating tool to bring your price down and get back to a price that actually represents really what is just a single family, right? So, this has only been on realtor.ca for 7 hours too, by the way. So this is actually a hot lead. And just for context, like without looking at exact comps for this address, like in the general area, I was looking at comps today for like a similar type property with a detached garage, but done up like super clean. And there's comps everywhere from like 700 to like 740, right? So there's a bit of spread there. At 540, right? Like, I don't know, a decent little formula you might like to use is like 720, right? Times like 0.8, and then minus your renovation costs. So like, say something like this is going to be 40 grand, pretty small house. So like, I mean, you're pretty damn close when it comes to, oh shit, I don't think you guys can see my calculator, which is going to be unfortunate. Because I can see the stream on my one. Okay, hold on. I just really messed that up for you guys. I'll come over here. This is a deal calculator, and we'll redo it on here so that we're actually going to show you the thing that you came to see. So if you're things like 740, which is pretty high, like maybe it's whatever, maybe it's 720. Maybe it's 720 and your purchase price is like 540, which is what they're asking, right? Doesn't mean that's what you got to pay. There's no rents. So just to go through my calculator here, there's a couple assumed things on the calculator and a couple things that I like to change. So on the calculator, we have these as fixed values. So like legal fees are like, roughly 1,200 plus or minus a couple hundred there. Land transfer tax. I don't know what, I think we just put like a random 4,800. There's a way to calculate that. But we were just lazy on our calculator because it doesn't actually matter when it comes down to just quick calculations, just to see if it's a good buy or not. Lender and broker fees are 2%. And we're looking at like buying and selling or buying and refinancing for a BRRRR or for a flip. We're assuming that a down payment is 20% of the purchase price. And then we've got wholesale fees and stuff on here. Realtor fee is just assumed to be 5%, which, I guess can't see this on the public side, but on the back end of this, you can see what they're actually offering here. So it might be 4% in Cambridge, or it might be 5. Utilities for the average home, I just have like $150 a month, I think, for gas. And what else have we got here? Tax. I just usually put 3,000 as a fixed thing. And so like you can play around with all of these and, just change values in here as necessary. But like, this is kind of what I'm looking at. And I have 5% in here as a rate. Like, I don't know if that's relevant today. I guess we could go check, couldn't we? So like, what's a good TD mortgage? We'll go check out TD and see what they're offering. So like, what are we trying to get here? So 540 was our purchase price. So 540 times 0.2 is 108. Shit, times 0.8 would be easier. 540 times 0.8. So we're looking for 432. 432. Oh, wow. Look at this. We're at 6.49. Holy shit. So we got to update the sheet. Let's absolutely update the sheet because apparently Adam's out of touch. So what was that? That was 6.49. Holy hell. Okay. You can tell I haven't been buying properties for a little bit. Okay. So your mortgage here is going to be at 2,900, which, I don't know what rents are in this neighborhood, but maybe a few grand or something, maybe 3,500. Like when we were doing that duplex had huge units, like just absolutely massive units. And I don't know, it was kind of a stretch to go above 3 grand. So, when I'm looking at something like this, like I don't think this is a long-term rental prospect. But again, I'm coming at this from the perspective of like somebody who's invested in London for the last few years. And I don't really see a point in investing at like a 0.5% rule, right? So for me, that doesn't really make a lot of sense. You'd have to get either a lot more rent. So maybe that situation that they're kind of looking at there with like having another unit or like a granny suite in the bottom, and maybe you can get that rent up from maybe 3,000 to 3,500 up to like whatever, maybe closer to 5 grand. That makes this opportunity look a lot better to me. Otherwise, you're just looking at it from a flip perspective. So we'll have to look at that. I'm just going to change these rates because apparently I'm super out of touch. because yeah, holy smokes, man, rates are high. I know people have been screaming about it for a bit, but that's really high. So when I'm looking at that, I'd say like our reno budget there without seeing it, because again, like this is the problem with doing this. Like it's fine as a strategy, because now like if you're interested in this type of property, then like you have to go and actually see the property and like go walk through it. The problem is though, if you're analytical like me and like mildly autistic, like the problem is now I don't know what the hell I'm looking at. So I have to make a whole lot of assumptions here. And the problem with making assumptions not only doesn't make an ass out of you and me, but it really limits our access to pertinent information. Like if I had that same walkthrough that I showed you guys on my listing right now, I could skip all of the work of going to this property and just do a full deal analysis right now, and I would know exactly what it costs. So now I have to make assumptions about how large the kitchen is, how large the bedrooms are, how much flooring needs to be redone. I'm just going to assume all, and that's the problem, right? So as an investor, you actually have to make all of the bad assumptions now. Like I'm assuming everything in here is terrible. It's all absolutely got to go. Nothing is salvageable. So that might make my reasonable reno budget go from like 40K to just say like 60K, and we'll just do it all. So problem is here, total cash required 186 grand. Is that right? Does that make sense? One of these calculators, by the way, I totally broke a little while ago, so we're going to find out right now if that is the correct calculator here. And our after repair value at 720. So if we do 60K and 108 grand for the down payment, your legal fees at like 2,400. So this is looking at if it was a flip, 4,800 for your land transfer tax, lender and broker fees, that was 2%. Realtor costs at 36 grand for selling the thing. Make sure that's correct. Sounds correct. Yeah. And then your mortgage. Oh, so you have to spend time. So this is a sell that we need to adjust here for how much it's going to cost in terms of holding. And I feel like a lot of people just ignore this. Like when I hear people doing their deal analysis, I get kind of pissed off sometimes, because they'll like look at the amount of time from how long they think it's going to be to renovate it, but then they forget the current market conditions actually affect how long it needs to sit on the market. So what I would look at right now is like go and find out the average days on market. So like just do this for any city, but let's look at Cambridge. Housing stats, whatever. What month is it? So December 2023. So let's go and look at it. So here's a bunch of stats, and what we want to find ideally what we would look for here is days on market. This isn't the actual report, which is kind of annoying. So somebody much smarter than me would already know what the Cambridge like housing thing is. The hell is it? Treb. I don't want Treb. Oh my God. Hey, Zach. I see Zach in the comments there. What is the actual like where do the actual housing stats get posted for Cambridge? Or whatever. Korea stats are fine. We can just use Korea stats. Oh my God. Sorry guys. This is terrible. But this is the thing, like this doesn't need to be hard. You just comb through the data and go ahead and find this stuff on your own. And the thing is, like, if you see here, like I'm just kind of clicking around, you find like all sorts of information just by Googling things. And oh, for Christ's sakes, isn't the report usually just come up here? Monthly stats report. Let's do this. No, but like I actually want the whole report. What's going on here? Okay, we're finding out about the. Okay, let's just hit download and see what happens. God, you guys wanted raw. You wanted real people doing real shit. It's happening right here. Oh, great. Now we're going to have this thing telling us we don't have a subscription to Excel. Classic. That is super classic. All right. Well, let's just Google days on market, Cambridge, Ontario, December 2023, because they won't have data for they won't have data yet for January, obviously, because that's where we're at. Why is this so hard to find? Zach, where are these stats at? Cambridge, you know what's happening too? And sorry, this is just a total rant incoming. The goddamn McAfee security thing that is installed on these Windows computers, they kill you because it changes your search engine away from Google. And I'm telling you right now, as creepy as Google is, it's the only search engine that works. Here we go. So Cambridge, housing stats. We could even look at November, just in case they don't have the data published. Okay, it still brings us here. Whatever. We'll pump up the Go Wild team. We do have Zach here, who's our sponsor for Kitchener. Days on market, 23. So that's all we want to know, for God's sake. So a lot of the time, these real estate companies will just have nice resources like that, which is fantastic. And like, again, like just go to whatever source is like quickest and easiest for you and get it saved. Usually I do actually like the Korea stats, but I was having a hard time getting that started because of the Excel is apparently a thing on this computer, not a thing with Macs. But anyways, it's 23 days or 27 here. Zach has in the comments. So 23 days. So here's the thing. 23 days on market. That sounds pretty good. I'm clicking around on all sorts of things. So when we think about our months in the deal here, we have to go raise the capital, maybe start paying interest the day that we close. Maybe on something like this, we'd spend like 2 months in there, totally rehabbing everything. So you'd want to do something like kitchens, bathroom, landscaping, lighting, paint. And, if you can wrap up all that in like 2 months, you're getting pretty good at it. And then you've got 23 days on market. So that's 3 months. And then you've got to think about, and this is what everybody always forgets, things don't actually close the day that they are agreed on, right? So when they say days on market, that's like how long it took to get sold. Then the thing has to actually close, right? And so people always forget about those 3 months. It's usually like 60, 90 days to close an average deal because people need to make arrangements to sell the property that they're in or, pack up all their stuff and actually get moved. So that very quickly brings this to something like 6 months in the deal, which changes the math quite a bit. By the time you actually look at what your holding costs and your variable costs are. So during the whole time that you're flipping it, there's no rent coming in, so you've got no revenue, but you can still make money, right? So this deal actually makes perfect sense if you were able to buy it at 540, which is what it's listed for. And like, again, that's either a pricing strategy to get more offers, or that's what the seller wants, or that's what they think they'll sell near. Or maybe this is actually like their bullish optimistic price and they're hoping to sell for a bit less. So what I would suggest is when you're going to go, if you're going to go make an offer, like call Zach. So Zach Britton's here in the chat. Give him a call, tell him you want to go see this property because there's absolutely no photos of it, and go look at it. And then you guys can figure out an offer from there based on more closely comparable sales. And if you actually look at that address and then you see like, oh, okay, like shit, in that specific neighborhood, the deals are actually only selling not at 720, but maybe it's less. Maybe that neighborhood's not as valuable. And it goes down to like, say, 680. You can see quickly how that just turned my chart red and very quickly changes the results. So this is where having the right information, like maybe you go in there and you see that it actually only takes whatever, maybe it's only going to take 35,000 to renovate that place. And then the valuation's only at 680. Boom, still works, right? You could make a possible 30 grand there with some risk. Or maybe you go in there and you look at it and you're like, oh, damn, dude, this thing's never going to be that. It's probably only worth 625 after being renovated. And you still have to do 35K to make it that much. That's how you can use sheets like this to very quickly look at a deal. Notice how, like, we can analyze this deal, and I've been talking, so it takes longer because I'm just trying to share with you some of my thoughts. But if I was just looking at this deal, like you just pop these numbers in immediately, right? Like go look at a couple sales in the neighborhood and find out what the actual after repair value is, and then pop in your purchase price that you're hoping to offer at, and then you can see very quickly, like, oh man, if this is a 35K project and it's only going to be worth 625, it's absolutely not a deal. But if it's a 50K project, and then somehow the property actually does go up to whatever, let's say 700K, like maybe it does work. And that's what I like to do, is I like to use these sheets to just very quickly make that analysis. And like you could play around here too. Like let's say rent was 3 grand. Something's dicked with this, unless it's not. Hold on. No, that's not even broken. So here it is as a Burr calculator. So remember when I was saying like at 3 grand, it just makes no sense. But if you could get the bottom to work as another unit and then somehow it was closer to 5,000, like that actually almost makes it make sense, but still not even quite, right? And you could go around and say like, oh, whatever, maybe I've overestimated some costs here or whatever. You could try and play around with the numbers that way. But at the end of the day, like, if we're talking about $50 or $100 or $200, that's not a great investment unless you think that this property is going to be worth a lot more and it's actually worth a lot more long-term to hold it. So like maybe you say like, okay, yeah, but I expect this neighborhood or whatever to eventually become 780,000. Then what you could say is like, yeah, like, listen, I lose a couple hundred a month. Maybe I lose a few $100s a month, but at the same time, like I'm expecting to actually bank a lot of cash on the actual dispo of this property because I'm only putting in 50K plus my 108 and some closing costs, right? So 215K. That's all I'm putting in here, and I stand to gain that delta there. So like, I could see different arguments for how you would make this work, but generally speaking, like if cash flow is what you want, a deal like that is not going to be it. It's going to be something where you're looking at flipping it. So I see some people asking if they can have this calculator. Yeah, I'll find a way actually to make this a download on my website. And when I do that, just stay in touch. Like as we continue to do these live streams, just remind me and I'll just make sure that I actually do set that up for you guys. But I'll make it available once I like fine tune it. There's still some shit in here that like sometimes doesn't work as nice as it should. So I'll set that up properly and then I'll make it just like a free download or something like that off my website. In the meantime though, keep it simple, right? So like another calculator that I have, actually I'll use my other calculator too on the next stream. It's way simpler than this. This one like has like, refi and all sorts of stuff. My other one's like 5 lines, right? And I think it's really important. Like you can build one of these for yourself very quickly. It's pretty simple to just think about what actually goes in. So you have your renovation budget, right? And that's gonna be break that down if you want on a separate sheet into like, kitchen, bathroom, flooring, landscape, lighting, paint. That's usually what I do. And then from there, you're going to have your general holding costs, which is your mortgage payment, utilities, taxes, insurance, right? And so those are kind of your main holding costs. And then you do have a couple one-time costs, which are just like your legal fees, land transfer tax. There's generally speaking like a lender fee or a broker fee that you pay. But a lot of those fees get wrapped up in the mortgage. So you don't really have to think about some of those fees. And like the realtor cost is generally speaking paid by the seller. And so when you're thinking about a realtor fee, like you only really start thinking about that when you're going to like flip the building. So if you're just doing a long-term rental, you don't even need to think about that really until you're going to go dispose of it. So yeah, Anthony just said like it's getting so hard for numbers to make sense, and it's like, yes, actually that's a great point, and that's kind of the purpose. Like we want to do more of these like casual streams to just talk about this stuff, because like, you know, you see a deal like this, like even this property that we just looked up. Okay, it's 540 grand. You know, it says it's great for renovations or whatever, but we don't have pictures. And so all of a sudden we have to like start making a whole bunch of weird assumptions about like what it's going to cost to renovate, or go see the property, which is obviously the strategy they're going for here. And it's like, if the numbers don't make sense, like, okay, no problem, next. Right. And so the purpose of these calculators is not to get like all lost in like the spreadsheet madness. It's to like get the numbers in here immediately and think like, okay, if this is worth eventually 700, okay, we really quickly want to put 700 in here, put our purchase price in here, put our expected reno budget based on whatever assumptions we have to make, and then immediately make a decision whether or not it's going to be worth our time to look further into it or just burn it, right? A property like this could be worth looking more into, because if it's 780, or sorry, it's not ever going to be 780, I don't think. But if it's 700 grand and we're paying 540 and we think it's 50K reno, then boom, we've got we've got 32 grand in potential profit there. Maybe it actually costs 65,000 these days to do a full reno, because I don't know if you guys have been to Home Depot lately, but everything's expensive as hell there too. So we'll just say it's 65. Now it doesn't work. Okay, so if this were all, you know, reasonably tight numbers, like we thought, okay, that's our best estimate. Are we going to do any type of business deal where we lose 17 grand from the outset with that, and that's with nothing going wrong? No, we're not. So boom, what do? We go over here to the listing, and what do? We just close it. Bye. See you later. Next, right? Like a Taylor Swift song. Thank you. Next. And then we just click on the next one, right? And so we go over here and we think, okay, look at this property. Lots more pictures. We get a way better understanding of what it is, right? It's looks like a townhouse or whatever, or semi-detached, whatever you want to call it. And looks clean on the outside. Nice paint, decent flooring. Looks like a great rental. Not much of a flip, because I don't know what you're going to do in here. Like, yeah, I mean, you could change the cabinets to like the new shaker style or whatever, but that's not going to add that much value, right? So we come in here, we look at this. Yeah, sure, you could change the doors, you could change some of the casing. What's going on with these windows? It's got newer windows, so you're going to leave those. You know, the classic boob lights, like you could change all this stuff, maybe put some paint, investigate that roof leak at some point. You want to maybe look at, you know, you could update the carpets or whatever. The rooms seem like actually fairly big for the age of this building. Bathroom, you know, kind of old style. It's got the lavender tub that I love, and it's got an older vanity here, so you could update that, but not a ton of value add, honestly. Like, it's really not a ton of value add. So what I would look at here is, real quick, if I did those couple updates, am I going to get the rent? So what is this? So 579.9, and let's just assume for the purpose of this that we're going to offer them that. So we come in here. Let's just say it's 580 or 570. We can't ever give them what they're actually asking for. Okay, people, don't be doing that. So let's say it's 579, 570. Sorry. So just real quick, this is how we do it. So 570. Okay. And we'll just say that we'll do those few updates, and it's really not going to be worth that much more. We're not really going to go and refi it. Okay, so it's maybe worth 610 when we're done. And but then, you know, maybe we get 3,200 in rent, and we just real quick look at it and we go, oh Jesus, no. If we do that, we lose a bunch of money, right? We're going to be down a ton of capital. And does it make sense? This is why I have this column. Does it make sense? No. So what do? You go back here and you close it. Thank you. Next, right? And then you come back down here and you say, okay, well, what the hell else is next here? What do we got here? That's a condo. Adam doesn't like those, so he skips them. And then we go over here. We look at Nelson Street. Okay. So we click on Nelson, and it's got like a bit of an older style finishing outside. Obviously, they missed the landscaping part of my pitch. That's okay. But you look inside and oh my God, it's just been renovated. That's crazy. What do we do with recently renovated properties? We close them and we say, next, right? Of course. That's what we do with those. And you go, okay, let's go. Oh, that's the same thing. So we'll go, maybe we're feeling coy and we go, let's start with lowest just to see like what's going on here. There's like a mobile type home, which I'm actually starting to get more interested in as the years go by because they're just so like cheap and easy. And like, look at actually how nice this is. Like, dude, don't tell me this is not better than half of your rentals. It is, right? It's nice in there. And you know what you're going to get when you rent this. So I like how they painted the old cabinets too. It never actually seems to work out. People always talk about it, but it never really works out that nice. But I like this wall. Anyways, I'm just being sort of silly with that. But at the same time, there is actually a great investment strategy in focusing on those. I just can't get over the ones where you don't actually own the land. Like, I don't think I like that. A bunch of condos here. But you can see too, like, actually, here's just a good point. Here's a good point. Like, we were looking at those houses just now. That was like 500 grand, right? So for 350, you're in the condo world. And like, this is what you're getting as a condo. And that's not your sauna, by the way. That's just in a common room somewhere. So like, you know, when I'm looking at that from in terms of an investment perspective, like, dude, give me the house, right? There's so many more people in the market, so many more exit strategies than that. I just saw a comment there about a specific property, so I'll pull that up. And guys, I'm sorry about this cold. It's frustrating. So I'm sorry if I'm coughing on here. Okay, so we got 1093. What does that say? Brantford Highway. We'll see if we can find this. It says it can't find that. Hey, Zach, I appreciate you tuning in, and I'm glad we're finding some value here because, yeah, that's the point. That's what we're trying to do. And again, guys, this is like a casual stream where I just want to hang out. And if you guys have questions, if you guys have properties you want to look at, if you have you know, just general thoughts about the market, or you just want to come and hang out because there's nothing better to do because it's snowing outside, perfect. Let's snow day together. But seriously, where's this property? So we got 1093. I copied this right from what you typed. Brantford is it supposed to be highway something? Like, is there a number after this? Whatever. Let's just try typing in. Oh God. We're really getting twisted now, guys. All right. Well, if we get some way to search Sanju, I'm sorry, but this 1093 is not showing up. If we get a way to search that, or you can even just throw the listing number in here, the MLS number, we'll take a look at it. In the meantime, real quick, I got 83. We'll look at this one last Cambridge one, and then I'll jump over to that Ottawa one. So 83, St. Andrews. Here we go. Okay, so the first thing I like to do, right, is I just click right on the photos because it'll give me an idea sort of what we're looking at. So nice yellow brick house. You can see there's 2 meters there. You can just barely see, but obviously this is either a duplex or more, but it's at least got 2 meters. It's a bit older, obviously, as we're seeing here. So it's got wood floors, very dated kitchen. You know, the countertops, faucets, cabinets, all that would go in a flip or a rental scenario, I would think, if you're trying to do a burr. Oh, you got your little attic hatch there. That's actually nice. That's a nice little hatch. I don't know what that is. Could be a closet, could be a bathroom, I guess, in these older buildings, but it's probably a closet. You the thing is too, like with these, when you're doing these rentals, like you probably want to replace this. I'm not gonna lie to you. You could just replace this coil or whatever, but people are looking for a more modern thing today. The range hood too, it's got to go. I would do the lighting in here. The windows are wood. Some people hate that. I don't really care actually about wooden windows. I would just leave them. That's awesome. I like the register in the floor trick, and you're gonna have to do something to finish that. And one thing I find people actually always miss in their budget is just like trim and casing. Guys, it's not free. And actually after COVID, that stuff's expensive. So make sure you factor in at least like 3-4K for trim and casing everywhere. And don't forget you have to paint it, right? Because it just comes primed and it looks like shit when it's primed. So you got to paint it too, which takes more time than it does money. But add in at least 2 days to paint everything. These old doors can be cute if you paint them. Some people replace them, some people paint them. I usually just paint them and change the hardware. Lighting again. And I also just found out that I've been doing things wrong for my entire life. And everything now needs to be purchased, like all those small finishes, Amazon. I don't know how I can show this to you guys. So if you see on the stream there, these lights, these like flush mount disc light things, they're dimmable, and they're $120 or something at Home Depot right now. And on Amazon, they're $31. They're $31. And it's the same light. Like, dude, it came from the same boat from China. Like, just give it up. You're not going to Home Depot for that anymore. So Amazon, it ships to you in a day. And I haven't had any issues with them. They're great. And you can change them from like blue light to like the warmer light. So like, well, you know what I mean when I say blue, right? So this is actually on like the bluer light setting right now, but in the bedroom, I've got it on the warm light. So it's great, and they're dimmable, which is perfect. And it's $31 instead of $125. So I did the whole place for the cost of one freaking light. Anyways, back to what I was showing you on here. I was just griping about Home Depot. So yeah, anyways, you got to do these lights. I would just, again, leave the damn windows. They're fine. Whatever energy savings you think you're getting, like, come on, right? It's an El Nino year. You don't even need better windows. It's hot outside. Okay, old hardwood. You got options there, right? You can refinish that. It looks great if you do. Or what I usually do, just floor right on top of it, right? This old trim and casing, it's actually beautiful trim. Hard to replace that. And if you do pull it off, it's a real pain in the ass. You'll have to either reinstall the same trim or get something as big or bigger than it, or you're going to end up having to like sand down the wall and sort of do some mud to smooth it out. Because it'll leave this like giant line across the wall, and it's actually noticeable, and it sucks if you leave it. So I would probably try and preserve that trim. It looks like it's in great shape, but you might want to paint it. Depends what finish you go with, right? Like in here, I have like a gray floor. And so like wood trim would just look so awful with a gray floor. And I don't know, maybe just paint that trim and sort of ruin its original beauty. But, here it is here with white casing. Looks great, right? Do white casing everywhere, white trim everywhere. And I'd probably go with a gray floor. Yeah, see here, this is what I was waiting for, was like that real hot spot. Like it's probably where like the couch was or something, and like this is like right in front of it, so people are constantly walking here, and the hardwood finish just gets so screwed up, so you got to deal with that. But like again, like all this wear and tear, like see this picture, how it looks a little. Can I zoom in on this? Oh, that's out. What the hell? Okay, well, apparently if you zoom into 500%, it makes the picture smaller, so I don't know what's going on there. Guys, I'm not a professional streamer yet. We're going to have to get better at this. Peter usually edits all of our videos so he can cut out all my nonsense. And it's a full-time job for Pete. So here we go. We're learning here. But anyways, you can see my point here. There's like wear and tear on the floor. It looks kind of dirty around these windows. The ceiling looks like shit. The fan, just get rid of it. Get rid of these terrible lights too. But I'm talking like, paint this whole room. It's like $300 and flooring at like, $350, maybe $4 a square foot. You won't see any of this. It'll look just beautiful. It'll look like a brand new place. So that's pretty much standard for that. And like with these doors too, you can either paint them or get new doors. You can even just add like casing to the outsides of these to actually make it look a little bit better. That doesn't take very long. Cool door knocker. Looks like a decent building. It's got like a nice outside area. Looks like that's the driveway. Yeah. Driveway. You get some insight here into the roof. Doesn't look like the roof's been done in a little while. Got a pile of extra bricks laying around. Ladder. The property's actually in pretty decent shape. That little trailer's got to go. So you'd have that on your offer. Anyways, all of that is to say, like, you come in and you do this building, and let's go read the description because it looks like it's got a duplex. Yeah. So it's a duplex, and it's pretty simple to return to one large home. We'll be the judge of that when we walk through it. And if you've dreamed of owning never believe the descriptions either. So never offer what they're actually asking, and never believe the descriptions when they say, it's simple. You can just return it to one big house. Yeah. Okay. Perfect. You guys do that before we close then, right? If it's so easy, you guys just do it, and we're going to offer the price for a single family that we want. And then you do it. So if you've dreamed of owning a detached home with character, you can update over time. This is it. Entry-level price point at $499.9, which, it sounds like an entry-level price. 2 separate hydrometers and 2 driveways, one on the left that holds 4 vehicles and one on the right that is not really used. But the curb's cut out. And it's been on here for 35 days. So pretty typical. And then zoning description down here is R4. So that's nice that they have that down there for us. And, so we can start looking at price. But I don't really see how it's duplexed. So I guess that's just like, it's another reason why at the start of the stream, like I showed you guys my iGuide one, where you can actually walk through each level and walk through the entire property digitally, because it just gives you a much better understanding where you are in the floor plan. Where looking at these pictures, like I don't really understand which unit is which, or if we're actually even getting the full picture of both units. Because right now, like this gives me the impression that like this is the same kitchen as this, and then that's probably in the same kitchen as well. So like really, I think we're just seeing one unit. So I don't really understand what else needs to be done, because if that forces me to think about it critically, then I have to think, well, there's probably 2 kitchens that look like this or similar. And if that's the case, then I would want to do both units. So I'm going to have to look at my budget for this and basically double it. So let's just say like, whatever, 15 grand in the kitchen's pretty standard. Maybe like another 15, 20 for the flooring, a bunch of lighting, would call that $1,000. So we're at 35, 36. And then, maybe $2,000 for paint if we're going to paint it ourselves. So that's 38. And then, what else? We'll add like 4K for trim. So 42, and then we'll double that. So that's 84. So we come into our sheet here, and what do we say? It's 500 grand. So we come into our sheet and say it's 500 grand. Maybe the after repair value on something like this is like, I don't know, 680. And we're going to put 84,000 in. So if it's 680, that's not going to work. If it's 720 and we actually go and start looking at comps and finding comps there, all of a sudden, like, you can make sense of this type of thing, right? So I think it depends. And like, if it is a duplex right now and one side's rented, so like you'd have to look at maybe your current rents there. So like, none of this stuff's posted, right? Like, this is the problem with using MLS that I never really enjoyed, is once we're into this listing, right, it doesn't mention in here Well, we have taxes at 32, but it's not going to tell us the rents, right? So what we have to do here is we would have to go and get some additional information from the salesperson. So, we'd reach out, we could call Khaleesi. That's cool. Khaleesi DaCosta. So give DaCosta a call and just be like, hey, like, what are the actual rents here? And just figure out like what's going on. But like, if we just, again, are forced to make some assumptions, like maybe we can get like 2,500 in the one unit, and maybe the bottom unit's currently rented. Let's just say it's under rented, because typically that's how we're buying these things. Maybe it's currently rented at 1,500. That's 4K. And right away, you've got an issue with cash flow. Maybe you can get more for that. And you still have an issue there until maybe one of these days you actually renovate the other unit. Oh, sorry about that. And then at which point, unless you can get 2,500. So again, like, this is how I use these sheets. I just really quickly throw in numbers, because for me, like, the actual sheet, until I'm ready to go do the walkthrough, do some measurements, actually source the materials and who's going to do the labor, I have no idea what it's going to cost. Like, this number could be totally out of whack, or it could be close. But what we're trying to do with these sheets is get an idea, like, do we continue to investigate? And it's like, yes, we do, because if we get 2,800 here, maybe we're making a few $100. And maybe we go and we check this out and it's only $62,000. And so all of a sudden we can start really making sense of, how this property is going to come together. And that's when we would come over here and we'd say, like, okay, now that we think it's something worth looking into, let's go do the other side of the strategy, which is like going and seeing what the hell is going on. So like, I'm going to come into here, and like, you'll have to forgive me because I'm really terrible with Cambridge. This is why we have Zach. But I'm going to come in and I'm going to see what's going on here, right? So just immediately, like, I'm going to look at what's around it. Okay, so just real quick, like, it's near a theater, it's near a couple bars, it's got like a retirement community, it's right beside the fire station, which is either really lucky or absolutely horrible for a living experience, because the trucks will be there all the time. Whatever, there's a dog spa. One of the things I like to do really quick is to see what I like to see what grocery stores are nearby. I don't know why the option's usually up here for grocery stores, which is silly that it's not right now. But let's just go groceries. Okay, so the closest thing is a Sobeys, which is actually a good sign, right? And you can actually, you guys might think this is crazy, but you can tell a lot about a neighborhood based on what grocery stores are there, what restaurants, what is around it. And I like to use that information to just kind of think about what type of tenants are going to want to live here. And then finally, like, I'll always just grab my little guy and we'll go for a street tour. So you can see, like, oh, nice row of looks like really well kept buildings there. And here's our potential property, right? So what I like to do, like, ideally you would go and drive around the neighborhood and go check it out, but I like to just take a walk down here, right? See what's going on. What I'm looking for too is I want to come and walk the neighborhood on here and just see, like, are there any other houses, right, that are maybe in disrepair, or are there like recently renovated houses? Like, look at this thing. That thing's sweet. Who did that? What did that go for, right? If that's sold recently, what did it sell for? Like, what would this property look like if it was done up properly? Who's door knocking this one, right? Like, this is what I like to do. Like, so when you think you found a deal, go just jump on Street View, go comb around on the streets, and who knows what you're going to find. Like, walk down this street. What's this? What is this? This looks more exciting than that brick house. That's a good one to door knock. Now, what's going to happen if you door knock that? You're going to get a tenant, right? And they're going to say, no, I don't own this. I just rent here. Okay, perfect. Can I have your landlord's number, right? I'm looking for a place to buy. This is always good, right? Go door knock that. Okay. Window shaker. Okay. Triplex. Sick. You definitely would like to go see what's going on there. Is it for sale? How long have they been living there? What are they paying for rent? You're looking for a place to buy, and tell them that you would love to make improvements on that property. They got window shakers. Maybe you can add forced air, right? And then when you're done all that crap, just click back. You're back to your property that you're looking at, and then you can make your sort of assumptions or decisions from there. But this whole process, like when you're clicking through these, this is like, maybe 3 minutes per property. We're not going to spend much more than 3 minutes, and then we're on to the next, right? So like if it was just me looking at these, I'd be immediately clicking over to here, and I'd be looking at this property, and I'm going to fly through these pictures, and I'm going to think like, okay, wow, for 419, this house is a lot smaller, right? Whoa, Jesus. So like, this is the thing. Like if that house is actually going to sell, if this is actually going to sell for 500, this is a way better property than this. Like, what is this? What is this? This is El Segundo, right? What's going on here? This is like, this is what some of these airports look like when you go on those 1 week vacations to an all inclusive and you leave sick for 3 weeks. Okay. The airport looks like that when you get out of the plane. So I don't know. You got to ask yourself, like, what am I doing with my dollars? And it's like for 419, am I looking at that? Oh, shit. Reopen, close tab. How do I do that? Oh, how come this doesn't have that? Something my Mac would have. Anyways, you know what I mean? So are you buying this or the yellow brick house for a few grand more? And just remember that like every $100,000 that you add to a mortgage is like, roughly $600, right? Right. So $600 more. Do you want the yellow brick house that's potentially a duplex, or it is actually currently duplex, this one, or the little white house? And it's like, well, I know what I'm looking for, right? And it's not knocking this listing. It's just you need to go and look at what you're going to do with your dollars. And anytime you see a handyman special, by the way, get ready for financing issues. The banks love seeing that. But anyways, when you when you're looking at these properties and you're seeing the 420 house, like you just have to think like, okay, with the same dollars, what could I be chasing? That's a way better deal. Now, does that mean that this is the right deal? It's like, well, actually, no, it doesn't, because when we look over here, these numbers still need to add up, right? Like this still needs to make a lot of sense. And like the problem is with that house, like if it's still rented, maybe it is like really under rented at 1,200. Maybe you're losing a lot of money, right? You might actually be losing a bunch of money every month. So use the calculator, guys. Use the calculator. Be smart with your purchases and know what your actual goals are. We're going to look at one final property here. It was a property in Ottawa, I believe. And then I think we'll sign off for the evening. But I hope, guys, that you have been enjoying my process. And again, this is kind of a super casual version of this. And I'm not saying this is how we're going to do it every time, but I just wanted to kick off this first one with just a very, I don't know, just kind of open stream of consciousness type stream, and just let you guys participate. And hopefully, if you guys like this style, let us know in the comments if you like this style, or if you want me to go and like pre-select properties. What we could do is do like an actual deep dive on like whatever. I can go find 3 properties that I actually think are good buys and break them down and like talk about the full strategy that I would do and like what my real cost would be and whatever. I can do that too. But I just figured this would be a little bit more fun. And honestly, I just had a full day with walkthroughs. So let's look at this. Oh, it's a beautiful property. So again, I like to just comb through these photos quick. And this is for Anthony, requested to see 162 Meadowland Street. So here we go. I can see this is like a popcorn ceiling. I personally just don't like those, but I don't think it adds or subtracts a whole lot to the real value of the property. Nice fireplace. Flooring looks decent. Very bright and open here because of these windows, which I think is a huge value add for a lot of people these days. It is sort of chopped up the way that they have this half wall. This will be a load bearing wall, probably is why they did that. But like they already did the work of having there must be a beam here already or something, or some reason why it's open but not quite. So maybe just rip these goddamn half walls out because they're not doing anything. Oh, it's just for the cupboards. So like, yeah, I get like here, you just make a decision, right? Like, do you actually need those cupboards or do you not need the cupboards? And you could easily just rip that out and move the sink, right? The sink could go over here, rip out this half thing and have a huge room, or decide that the kitchen's valuable, keep the kitchen, change the cabinets, and give her. The flooring in here is certainly a blast from the past. So you could look at updating that. It wouldn't be that expensive, maybe $4 a square foot again. And then look at this. This is beautiful. I love this. Like, this sunroom's freaking awesome. It's hard to quantify things like sunrooms and stuff for rent because it's hard to say how much more somebody would pay for this type of feature. If you're looking at like flipping it, you could look at comparables that have a sunroom like this. And the way to do that, if you just want to even look at listings that have that, like you can go back here on your search and you can go to just click the actual search button and then go to filters. And then you could use keywords, right? So you could say like sunroom, right? And then just search in there. Now, of course, when you open, this is genius too, that realtor.ca does this. When you open realtor.ca and you hit search, it brings you to Washington, DC, our real overlords. Okay. Idiots. But you can use that keyword filter and then bring that into Ottawa, which is where we're trying to find. And you can see here, there's like a bunch of different listings that have that keyword tagged. So what is our property here? Shit. Where did it go? It's 162 Meadowlands, and it's like 750, right? So when I'm looking at these other ones with that same keyword, like I'll just go and find something at a similar price. So like maybe whatever, $799. It's $50K off. Hey, Pete, can you just give me some indication? I see a comment that says audio is not working, and that could either be the listener or it could be me. But it looks like things are working from my end. So I assume Pete would be yelling at me if it wasn't. Maybe Chris has an issue. Somebody write to Chris. Yeah, somebody send Chris a note that it's him. I for whatever reason right now, I can't comment. So Anthony, thank you for responding, and just let him know that it's him. So anyways, like what I'm going to do here, right, is I'll go in and search for that keyword. And then I just pulled up this house, which is $50K more. So it's not exactly the same, obviously, for list, but I'll go pull that up and just go look at it, right? Like what's going on in this house for $50K more. So maybe this is what they're calling the sunroom, but like it's not even finished, right? So like, you know, take $50K off the purchase price just for that. And you can see in this listing too, like a bunch of old hardwood, kitchen like completely needs to be gutted. The other kitchen's acceptable, right? It's just an older style. This is much older. Now, there could be other factors too. Like I'm not from Ottawa and I don't know the market. So like maybe Fifth Avenue is like a more desirable place. And that's why this house is actually priced the way that it is. Or it could just be that, you know, this house is actually maybe a better deal, right? Like maybe it's actually a decent price. So, and I'm just seeing too in your comment that it would be a 4 and 4 student house, $6,400 in rent. Owner pays utilities, $200K reno. So I guess Anthony, like when I'm looking at this property, so let's say we're at 750, right? So you're at 750 and you're going to put 200K into it. And so I would need to know, like, you know, what do we think it's going to be worth? Oh, okay. So you want to do a secondary dwelling unit. Okay. So I'm actually terrible at really understanding those. So, but let's just use the numbers, right? So let's just say the one The one is 30. Let's just say they're even. So it's 32. And then your secondary dwelling unit's going to be 32 as well for your 64. And then let's just say once you do the actual dwelling unit, maybe it's worth 900 or 920. I know that's not giving any justice to what you just did. Well, maybe it's worth more. I don't know. You got to tell me what you think it would be worth at that point. But so your renovation budget you said was 200. So like, I guess the problem is with this, when you're looking at it, like 6,400. So 6,400 probably doesn't get you a lot of cash flow, right? And why is that? That's because our mortgage. Okay, so this calculator, by the way, assumes that you want the 200K back, right? So it's going to assume that you're going to go and try and burr it, which is to say that it's going to go and try and get 80% of your money back. And so if that's a problem for you, and like you don't want to do that, then that's why you're losing all that cash flow. Like if you just looked at this and you're like, oh my God, dude, where's all my money? When it comes to the burr, it's because it's assuming that you want to pull that money back out and go and redeploy that on the next investment, which it might be the smart thing to do, but it's not always what people are trying to do. And so if you really want to fix that, you just go over here, right? Oh shit, I just made you a millionaire real quick. And you could just leave it. And then that's where you see that like you'd make like $600 a month. So again, like the real question here is not whether or not this thing makes money, but it's what would you do with the 409,000, right? Because that's so 409. So essentially it's trying to make you so 579 here, let's just do equal to 580. Let's just say 580. So it's 580 times 12, right? So you're making $6,900 a year off that property, and you're going to invest $409,700 to do it, right? So this divided by this, and we can make that a percentage so it's easy for you to read. It's a 2% return, right? So if you look at making 1.7%, and let's just go over here. What is 2023 inflation is 3.1. Let's do the math real quick. You're losing a lot. Okay. Right. You're actually losing money. And when these donkeys say that it's 3.1, they haven't been to Home Depot, right? They haven't been to the grocery store. They haven't like done anything, because 3.1 is a joke when you see that everything has doubled in the last 2 years. And by the way, inflation is one of those cumulative things that everybody seems to forget. Everybody treats it as if it's a moment in time thing. It's cumulative. So every time they say it's like, oh shit, it was like 6% for a while. Yeah. Now it's still 6% more, but 3% more on top of that. Right. And so, and they always exclude all sorts of data from this figure. So they're absolute donkeys, right? Like, oh, okay, it says 8.1% in June. So anyways, guys, I'm just saying real quick, like, you gotta look at what's the opportunity cost of this money. So if I look at this money, and thanks Anthony for chiming in, by the way. But if I look at this money, like 407 grand, dude, just go lend it. Go lend it. Like 407. Well, it's just 10%, right? If we just look at even a 10% private loan, 407 grand, right? Like, you're making real money at that point. It's 40 grand instead of 6. So, what's 40 grand divided by that? 5 times, 6 times the money just by doing a simple loan. So, yeah, guys, I wanted to just kind of, I guess, show you my process, and I hope I haven't offended anybody today. But at the end of the day, like, you really want to be looking at what's the best use of your capital, right? So we had a couple of really great questions tonight that I want to highlight. Like somebody asked us, should they sell a property that they're currently holding? Somebody's now just asked us, should they invest in this property? And looking at these other listings. And these are all great things that come out of doing things like this when we're looking at properties, because even just looking at the few different properties we saw in Cambridge, just totally random, right? Things that we picked out of a hat. You can see the type of properties that are just available out there. And I think it's a good idea too. Like go poke around in another town, like somewhere you don't know very well, and just like go through the whole process. So that you can just start thinking like, wow, like what would I do with, like these properties we were looking at tonight were mostly like $500,000 properties in Cambridge. And it's like, well, what is possible in that market with 500 grand compared to say this opportunity here in Ottawa, where we're looking at 750 plus a $200,000 reno. And then you actually run it through the calculator quick to find out that it's only a 2% return. And it's like, okay, like I think now especially is a great time to be super critical. And I'm not saying not to take action. It's a great time to take action, but it's a really great time to take decisive action on the things that are going to purposefully serve your goals, right? Like this is definitely not the time to just be haphazardly buying properties. Maybe in the way that we got used to in like 2020, 2021, where like you could almost buy anything and it would almost certainly go up, right? Like that's the market we were in. Now it's much better to ask the question, like, not the question of like, should I or should I not buy, but rather the question of like, what purchase best serves my goals, right? And so I think it's a great time. It's January, right? Everybody's just done their whole like freak out about the new year and you've just assessed all your goals. I understand that. And so you should have it in the front of your mind, like what specifically you're trying to accomplish with your next purchases. Now is a great time to be hyper critical of the purchase opportunities that you're looking at and not to just have a quick trigger on like the first thing that you see because you've wanted to do it for a while. So I think we got some really good insight into, what's available out there. We've talked about various different little strategies. And I wanted to highlight tonight with you on this stream, just more like kind of the process that I use, right? It's quick and dirty on the first look, right? Get the numbers into the calculator, make your best guess, come up with a few different scenarios, and then invest time, right? Like figure out whether or not it's even going to work for your strategy based on zoning. Figure out what your exit strategies are going to be. Get a rough estimate on your renovations just based on the photos. If there are no photos, you're forced to assume the worst. But what I would do is like a best case and worst case budget. And then I would go and find the comparables to support both of those. That way, when you actually go do the walkthrough, you can still be quick on it. And you want to have a good idea of your actual market rents and whether or not it makes sense. And there's been a lot of comments tonight that like the numbers don't make sense or like, it's hard to make them make sense. Yes, exactly. Move markets, right? If they don't make sense in your market, or you're not going to have the time or money or skill to invest into going to find the right off-market opportunity, then just don't, right? Like move to a different market or switch strategies. Like that's just how it is. And I think it is like we're saying too, that like you shouldn't be fixed on only one strategy ever. It's like if you don't adapt in this market, you will probably die, right? So it's adapt or die. And at the same time, like I wouldn't just be willy-nilly switching strategies. Like put some serious thought into what skills you have, what time do you have, what connections do you have, what sort of budget do you have, what are you going to do if it does go wrong, what are you going to do if the rates don't change, and how great would it be if they do, right? And so it is still a time to be taking action and looking at taking action, but it's going to require more liquidity, more time, and more risk, right? So that's why we have to be super diligent about whether or not these opportunities make sense for our long-term goals. And I hope you guys all enjoyed the very first MLS scraping session here with the Canadian Real Estate Channel. And I hope that, it's been fun. And I'm Adam J.D. Martin. I'm your host, and I'll continue to be back here. We're going to be doing these very regularly. I do have like a bit of a strange schedule coming up because of my obligations with the Army. And so we're going to be announcing these things. So just look out for the scheduled videos. Like tonight's was scheduled. And we're going to be trying to do our best to get these scheduled ahead of time. You guys can follow us on Instagram. So you can follow the Canadian Real Estate Channel. You can follow myself, Adam J.D. Martin. find us anywhere that you can on the internet, and we'll be posting well in advance for you guys to be able to get on here. And we're going to come up with a more stable, like reliable schedule so that you guys can predict when we're going to be here. And hopefully you guys will come and hang out, have a beer. And it's just me talking to the screen. So I really do appreciate the comments because it lets me know that you guys are there and willing and ready to participate. And I hope I answered some of your questions tonight. And I look forward to having a beer with you guys later. DM me. Let's set up an IRL beer wherever you are in Canada. And if you're not in Canada, well, welcome, eh? And that's it for me. Good night, everybody.